Alrighty, welcome to our market and trade recap for Monday, October 30th, 2023. One more day to go in the month, Halloween tomorrow. Hope today was not a trick and it continues to be a treat. It was a fantastic day for the account. But before we can jump into that, let's take a look at what the markets were doing out there. So let's just jump into our charts and see what happened in SPY today. So overall, S&Ps ran up about $50 on the day. SPY itself running up 4.91, a little over 1.2%, or right at 1.2%. So doing well here on the day, bouncing off the lower edge of this channel. So as you take a look at the weekly move, all the way down here, overextended a bit to the downside and getting a little bit of a bounce. So getting a little bit of a move here off the overextended end of this lower channel. So you can see here, it's a little harder to see with the little red line here is the 2 ATR. Got over that, bounced off of the 3 ATR on Friday, and then today back into the channel as a whole. So doing well here on the channel as a whole. And as we look at the rest of the markets, and again, weekly, just downtrending, MACD, RSI, although a little bit of a bounce today. And then daily, trying to get a little bit of a one-day flip and a return higher here. One day does not make a market, so we'll see what happens. Again, a 1.2% update. It wasn't a 10% swing or a 3% update. It was up 1% and change today, but it felt like it was up massively today. Let's take a look at what else happened over in the Qs. Not up quite as much, 1.13% on the session. If we look at the daily here, again, extended beyond the 3 or the 2 ATR back into range, maybe heading back up towards the 21 as we try to mean revert back to the 21. So every time we get down to one of these extremes on the 2 or 3 ATR, we will revert back up typically to the 21 moving average. So the extension right now overextended, and then maybe we bounce back up to maybe 355 or so on the Qs. A little bit of reversal here on the daily, still downtrending on the weekly, and then IWM as a whole up just fractionally on the day. Not a whole lot of anything here. I mean, it did move up. It finished off of its highs, trying to recover from this oversold territory on both the weekly and the daily. So this chart, though, does give a sense that maybe you're starting to see some bottoming type of an action. But if we break this to any great extent, this previous support that we've bounced off of so many times here, then we could be in more significant trouble. However, when you're looking at the 3 ATR, that's exactly where we are on the weekly. So it's a really overextended area. I would expect that since we're at the 3 ATR here, we are going to get some sort of a bounce. Will that happen this week? There's a lot of stuff going on this week. We got to keep an eye on. So we'll see where all of that stuff heads to as we go through the week. But when we're looking at the economic counter, tomorrow we're going to get Chicago PMI, not a big deal, consumer confidence. Those aren't major numbers. However, Wednesday, ADP, non-farm payrolls, ISM manufacturing, PMI, you get the JOLTS job openings as well, get the FOMC statement, so big Wednesday on the docket. Thursday, unemployment claims, and then Friday, average hourly earnings, non-farm employment change, as well as the unemployment rate, and then ISM services, PMI, all coming in on Friday. So we'll see what happens this week. And then you got Apple earnings and some others heading in there. So you've got to keep a look at the economic calendar. We'll see, but I do like the overextended downside nature here. I am expecting a bit of a bounce. I think if we get a decent bounce here on SPY, I'm going to guess this 424 area might be what we're looking at. So somewhere around 423, 424 is what we could look for, and maybe a bounce this week. Anything more than that would be surprised. But if we do get any kind of a bounce, I think it gives you an opportunity to put on some hedges that you maybe didn't have on already, because I think there is another leg down coming, but I would expect some sort of a bounce potentially in the meantime. All right, if we take a look at the VIX, it dropped all the way down to 1975, so pretty good day, back under 20 here as VIX just continues to give up a little bit the last couple sessions. You look at the US dollar, just sideways moving, but it also was down on the session, so falling down to the 21 moving average, 20 exponential on the US dollar. If we're looking at this weekly trend, we obviously broke sideways out of the uptrend, tipping over on the MACD and the RSI, and then again, just a sideways solid consolidation here on the dollar, which is a pretty, I don't bearish is a bad word, but non-bullish. So if we get any kind of a continued sideways movement, or maybe even a rollover a bit, that's what we're really looking at. That could help the markets as well. TLT fell on the session. Again, there's nothing good to say about bonds. I'll talk about ZB a little bit more. And then TNX, if we take a look, we were up just fractionally today, just hanging around these highs in here. But again, RSI has been not heading higher on this move higher in here, this consolidation range, which is something interesting to see. Now, if we get another run back to the 5% mark here on the 10-year, if RSI gives you a newer high in there, if we can hit a new high, then it'll kind of confirm that if we continue to see RSI just staying weak or moving more sideways and not moving up with the market, I think that's a good sign overall for bonds and for rates. Taking a look at some of the Forex, just this descending triangle that you have here on the Aussie dollar, moving up through the MACD and the RSI here. I think if we get another up day, we could get a bullish PSR reversal and break above this descending triangle piece here. Very good for our trades. We get a good day in that. We got a 112 trade on. We've got 4 days left in this trade. It's in great shape. There's not much to do with it. We're just going to let that thing probably just come off and get a 100% winner on that. If we look at the British pound, decent day today. RSI moving higher, as well as the more sideways consolidation. I think that looks good. The Canadian dollar, which has just really been beaten up heavily lately and setting some new recent lows, trying to hold on to this support level that you got in here. It's just hanging on by a thread, but it is hanging on. Good sight to see. And then on the euro, which is more my favorite one right now, on this breakout of the downtrend channel, this sideways move, and now getting RSI and MACD reversing and starting to move higher, breaking the 21 EMA. Still good signs on 6E. I do like the euro in here. We are looking to put some trades on in the euro. All right, bonds. We covered it briefly before. We broke down on this descending wedge here, or the descending triangle. We broke the support, headed lower. Now are we basing out here and created another falling wedge that we're trying to get out of, but we can't seem to do that. Momentum's just not there to get bonds moving higher, but they're consolidating more sideways. So again, if we can maybe come down here and test, we did close out another bond winner today. The more this thing just meanders in this consolidation zone here and doesn't continue to worsen. If you're looking at the weekly here, MACDs is a second straight week where we're trying to get a recovery. I like that. We are oversold. So the weekly, positive looking on bonds. I'm not telling you to go out and buy TLT and all of that right now, but what I am doing is I am consistently selling naked puts on ZB here at these levels, because you're oversold and starting to move sideways and out of this consolidation and this descending wedge. If we get a final break to the upside here, I think those trades are going to pay off for me. Nobody's getting rich on any big, giant, fast movement up in bonds, and I don't see why you'd get a fast movement. You have rates moving sideways and slightly higher as well. Rates are still at highs and higher for longer. We're going to see what the Fed says. That could have a lot to do with direction of rates after that. I don't expect the Fed to make any move here. I think they're going to let the market and bonds do the work for them a bit here, but I expect them to be hawkish and continue the higher for longer until they get everything under control. Expect that on Wednesday. Don't expect that the Fed is going to turn dovish and say, we're done, it's all clear, let's rally to the moon here. They're going to say, we're not seeing enough movement. Unemployment isn't changing the way it should be. The economy is very strong. Inflation remains solid. We're nowhere near our mandate of moving that down. So why would the Fed do anything except just hang in here and let what they've got working, if not maybe indicate that there might be another hike coming? That doesn't surprise me. I think that's exactly what we were expecting to happen here. So on that note, I don't expect bonds to worsen a whole lot more, but I don't expect them to really start to rally yet. I think you just got to be smart and be cautious here and watch how things are playing out. Oil, though, interesting story here on oil. So if we're looking at the weekly, we've just had a terrible, month and a half or so on oil. MACD continues to fall, RSI falling, about to break the 50. That's a pretty ugly sign here on the weekly. So I don't see good things happening to oil. You got a PSAR reversal. It's heading lower. I don't see anything positive happening right now on oil, excuse me. And if we look at the daily here, just look, these last 5 candles, almost identical, but slightly down. They just couldn't, came down, pushed up, came down. They keep coming off their lows of the session. But MACD continues to fall, okay, and RSI continues to fall. Until those things start to reverse, I think oil's still lower. However, this support level that we've had here around 82 has held up pretty doggone well here. We're nowhere near oversold levels, so there can be a lot more downside to come. If we break 82, then I think we're looking at this 78, 79, 80 range in here. Probably the 2 ATR is my target, and the 200-day moving average. Somewhere in this 78, 79, that's my at least near-term target range. If we get down around the 76 mark, which is this previous pivot level support area, if we get down here, I think it'll be very interesting to play a bounce. However, I'm still looking for this thing to hold up in there. I don't see a reason, with inventory low, all this stuff going on in the Middle East, there's not a reason for oil to really sell off heavy here. It's an interesting move that oil's falling with all the stuff happening in the Middle East and low inventory levels, and you having to buy to fill these inventory levels. The U.S. got to refill the Strategic Petroleum Reserve. They're going to have to do it at way higher prices than they've done before. I think you're just putting a bid underneath oil here, and I don't know that it can go much lower than 76. It doesn't mean it won't, doesn't mean it can't. I just like that level here, which is only 6 points away. I'm going to continue to sell naked puts below that level here and watch for oil to just hold out where it is. Gold, pretty much unchanged on the session for once. Here. So gold not doing a whole lot of anything. At one point it was up about 10 points and then finished pretty much flat on the day, which was awesome for our strangles. And if we look down here too on oil, here's oil volatility dropped on the session as well. So we dropped about almost 6% on oil volatility. And if we look at gold volatility, almost unchanged on the session, but that was a gap down change. So gold volatility has been coming out now for nearly a good week or so. So last week and then this week, gold volatility coming out, looking at this thing moving down to 16, where it was up as high as 19, but down again another almost 5% today on this move. So and heading lower, MACD, RSI heading lower. Gold volatility definitely coming out. That is great for our strangles that we have on currently in there. If we take a look at the sectors in the market today, looking at what the best performing sectors were. Well, that's going to be communication, which is your Meta and your Google, both of those having nearly 2% up days, and XLC up about 2%. Now, this previous support line has turned into potentially some resistance, so we'll keep an eye on this as we go. But we couldn't get above it today, but we closed right at it. So we'll see if this becomes a little of resistance for us, or do we keep climbing higher? Financials having a decent little bounce day today. So I mean, most sectors up except for two. Financials, it's just a bounce. Hideous looking downtrend charts here. Broke a support, trending uptrend line here. This thing's just, let's just keep the downtrend line going here on the weekly. So until we start to break this type of a line, and if we look even closer at more recent downtrends in here, right now you're just trending down, and there's really not much of a reason to think that this is done. So we watch this channel as we move here on financials. This bounce doesn't mean a whole lot of anything. It can bounce all the way up to 33 or so and still be in this downtrending channel. All right, XBI here, biotech, trying to find a bottom. It has just been obliterated. Terrible looking sector down here, just trying to bounce. XLP moving up about 1.5 today. KRE, which is your regional banks, 1.5%. Industrials about 1.25%. XLK, your techs, up just 1% on the session. Not a huge up day for the biggest sector in here. And then let's just skip all the way down. Real estate doing almost nothing at lows here, just flailing around in what on the weekly is a fairly oversold level. So might be an interesting spot on real estate to see if it starts to get any kind of a bid, but where did it go? Oil down just fractionally, and then semiconductors still just terrible. So semiconductors probably been the worst performing of the sectors now for weeks. This downtrending wedge, so this descending wedge, we're at the bottom. We are not anywhere near the top or any kind of a break here, so we'll just keep watching what happens. But you are definitely past the 2 ATR and you're at the 3 ATR level here. Might be getting close, or if not, already at some sort of an oversold level. Maybe a little bounce could be expected in there. And then if we look at really the main stocks here, Apple, your biggest cap, moving higher by about 1.25 today. Decent little bounce on Apple as we head into earnings on Wednesday. Just simply a bounce here, holding in there. Nothing big. Microsoft, another big cap tech, having a decent couple of weeks here as it broke out of this descending wedge, and it broke out to the upside, holding on to this uptrending channel that it's been building. So it's just moving higher here nicely in this nice little channel overall. So, and it seems to be broadening a bit. So let's see what happens on this. But this channel's hanging in there pretty well on that. Amazon, like the way Amazon looks here as well. If we take a closer look at the weekly, MACD's been moving higher. RSI definitely moving higher, breaking out of this downtrend range, and you can see it even better here on the weekly, breaking above the 21 and the 50 moving average the last two, today, really. And MACD moving higher, RSI moving higher. So it stopped this whole fall that we had prior to earnings, jumped on earnings. Now, all of a sudden, technically looking very, very, very different. But we are still only fractioning away from this gap. So we've got to, we're going to keep an eye on this particular gap in here. Let's extend this thing out. We still need to get to the gap filled. So we'll see if we can get this gap in here filled completely, which we're not far away from now, 135. We closed at 132.7 today. So we'll see if we can fill this gap. That would also give us a new higher high, even though we have a lower low here. So we had, lower low, lower high, lower low, but now If we don't move up any further, it's still a lower high, but if we can break and fill this gap, now we have a higher low, and now potentially a little bit of a trend change or a little sea change here on Amazon. Meta, watching this one moving here. We've been moving down, a little bit of a bounce the last couple sessions. Looking a little better on the underlying technicals on the daily. The weekly still not looking fantastic, but we do have really this ascending wedge look here. We have to break above that for anything exciting to happen. Google up decently today after this overextended drop. The 3-day rule was in effect, where the day one, you got to let it go 2 more days before you can trade it. So let's see what happens tomorrow. Do we get any kind of a move sideways or higher? I think you're well past the 3 ATR, you're past the 2 ATR. If you don't get a giant move higher here, I think selling some puts in this area may not be the worst decision. The weekly doesn't look too good, heading down MACD and RSI, so it's not really giving you a good trending direction. However, the daily, it's possible that this thing is a bit overdone here, and you could get a little bit of a bounce. I think playing some kind of a put credit spread or naked puts in here would be something to watch. Nvidia just trying to hang on for dear life right now to this support line, and we just continue to extend this line out. Just bounced off of it, bounced off of it, bounced off of it, and now right back on it. Let's see if we can get anything going. The weekly, you're just moving in this channel now all the way back here to June. We've been in this same sideways channel between really 400 and 500. That channel's a 100 wide channel that you're bouncing in. And if you really have been playing it well, every time you've gotten to the bottom here, which you came close to 2 ATR and this support, do you get another bounce and a move back up to at least 450, 430, and maybe with earnings back up to 500? Not a bad play. And here for potentially a bounce, I would think you could play a bounce on Nvidia and put some stops underneath this 400 support. Do we fill this gap? Do we fill it, and how? Sounds like a law firm here. We'll see what happens, but can you come down, fill this gap? I still think we fill it at some point here, maybe sooner than later. We'll see what happens. I just want to get it filled and be done with it and move on. We'll see if the markets move down there. We're well right in the dead center, so it's also a pretty good area to put on a strangle. Look at the 3 ATR on the weekly here, these 2 white outside lines, way up here at 550 and 320. I think you put a strangle on it, either one of those two right now, and I think you can move inside of that. When you look at Nvidia and we look at the chart, now you got earnings on the 21st, okay, which is about 18, 19, 20, like 20, 21 days away. The expected move for the 24th, which is just past it, is 46. The expected move for the 18-day right before that is only 30. Okay, but you've got a 40-point 3 ATR, and you're right at the 21 moving average. So I think this is nice for a strangle in here on Nvidia that would expire, or that you would look to be out before earnings. I think it's a good opportunity and a good play. IV is high, get earnings coming up. I think a strangle on Nvidia is a very interesting play. And then if we look at Tesla here, zooming in, I know there's a lot of lines and stuff all over these charts, so again, apologize. But on the weekly, we're just moving down in this descending triangle. Nothing has changed. You broke the support level here as well, 2 weeks ago. MACD and RSI on the weekly just heading lower. It doesn't look good. Big gap between where the PSR reversal is here, and you have a ways to go for the 3 ATR. If we look at the daily and zoom in a bit, well, you can see here that not only have we been past this 2 ATR, we have been riding the 3 ATR down. As long as this 3 ATR continues to point down and you ride it down, I'm a little hesitant on doing anything on the overbought or I'm sorry, the oversold level, even though you are very oversold on RSI. MACD had been heading lower. So the weekly's telling you it still looks bad. The daily's telling you, yeah, we're oversold, but we could stay there. So we'll see what happens on this as you ride the 3 ATR down. It's happened before. You can ride it up, you can ride it down, but at some point it starts to flatten. And if you're below it, you get a pretty good reversion to the mean. If you get a reversion here on Tesla, we could jump back to 230. I think we could go lower on this thing, maybe into the 175-ish range or something like that. But you're very oversold. So I think trying to play anything bearish is foolish on Tesla. But trying to play something big bullish is also probably not a great idea at this point. A pretty solid downtrend, and now you've got some overhead resistance levels you're going to have to break. So I think you just kind of keep this thing on the side burner for now. That's probably not also great for your Tesla stock. So for those of you, and you'll probably write me some comments as well, here's your crappy Tesla stock that you guys love, and now it's down even further. So, oh, but my average is 15 and it was only at 13 and I'm getting this gigantic dividend. Okay, well, now you're down to 10. If you bought in back here at 18, you bought in at 15, you bought it at 18, you bought in at 16, you bought in at 15, you bought in at 13, it's 10. Okay, you're down 30, 40, 50, 100% on this thing so far. So I hope you're enjoying your 50-cent distributions that come out of your net asset value. Your net asset value is going down. It's eventually going to 5, 4, 3, 2, 1, 0. Okay, so enjoy your distributions. Make that money while you watch your entire holding erode to nothingness. As Tesla continues to fall here as well. Eventually, this will maybe bounce. Again, they'll all tell me how wrong I was, okay? But for now, you're just not making anything. Oh, but I'm just in it for the income. That's the dumbest. That's like saying, I'm a dividend investor. I'm just in it for the income. If you're making 3, 4, 5, 50% or so on your dividends, but your holdings are dropping 10, 20%, in the meantime, okay, this is why dividend investing to me is a very difficult thing to rely on. Is, hey, when the market's down 20% and you're getting a 3% dividend, how many 3% dividends do you need to recoup your 20% loss? But I'm a long-term holder. Okay, you're a long-term holder. It's down 20%. It's going to have to it's going to have to go up 40% just to break even on that. So I don't love dividends. I don't love Tesla. I don't love these types of things in here. I think you make more money by selling puts, selling premium on these stocks, as opposed to trying to make money 2 to 3% at a time in these particular stocks and holding something that's going down. I'd rather not hold the underlying and get paid some sort of a dividend. Well, how do you do that? You sell premium. Okay, you sell naked puts. You sell premium and you don't have to hold the underlying. So as it falls, you're not on the hook. Okay. And then as it rises, you're just out of the trade making money. I know that's simplifying it. This is why I don't like covered calls a whole lot either, is I'm capping my upside. Okay. And I'm stuck if it goes down. So holding something that limits your upside, fully participate in the downside. Okay. And is not, to me, the greatest investment. Anyway, sorry, let's move on. Let's move off of that thing. And let's keep it positive here. Keep it positive. Let's look at what happened in the account today, 10:30. Our deltas came a little bit more back in line, back to 0.21, perfectly where we want them. Little positive, not too bad. Theta, 1976.63, great theta. We're in great shape. Net lick, 312,948. Net lick pounced up $11,000 and change. Okay, $11,000 gain today in net lick. Not going to brag about it because I don't care that net lick goes down, so I don't really care that it goes up. However, I will tell you that I am at a new all-time high in every single account we have. Okay, Told you this was going to happen. We're making money in the 112s, the strangles. We're making money every single day. You can just see every day we're making money. Last week, we made $10,000 on the entire week, okay, while the markets sold off. But I'm telling you, we're making money while the markets sell off, but our underlying is just hanging in there. And then on a decent day where volatility drops and the markets run up, okay, then you get giant pops in your net lick, and you're right where you should be. So 312, new all-time high in the portfolio. Fantastic. BP hanging the same, down to about 83, 84%. We made $509 today. We are now up 15,623 on the month with 1 day to go. We are up 5%. So without a giant catastrophe that forces us to close everything tomorrow, we're going to end up a great month, one of the larger months of the year. And then our net lick is up 16,000 this month and change, up almost 6%. So almost a 6% net lick. Those of you saying, well, it's all about net lick, Tom, it has nothing to do with realized. That's bullshit. It's all about your realized. Your net lick will be there fine if you hit your realized gains. Okay. And it's not about my net lick. I'm a trader. Okay. Not a long-term holder here, not in this account. Okay. But my net lick did pop up, but who cares? I made another $509 today, and we're up 15 grand. So it's all about, to me, your realized gains, following your plan. Love where we're set up. Let's take a look at what happened today. First trade of the day was a covered call spread, 0 DTE. This was a simple one today. So we were able to get in to 4,200, 4,225. We put this particular one on 25 wide. In fact, I think this number's a little wrong here. This should be 24,400. Okay, so we sold it for 60 cents. We took it off at 20 cents. That's a 67% winner on the session. We made $400 on that, which is a 1.6% return on our margin. So we'll take another 1.5%, 2% a day, every day, just selling these. Let's take this one and take a quick look at our 0 DTE. I may have pasted it, so we got to take a quick look here. If we take a look what we've done for the month, we're up $4,000 on the month. Only trading the 10 lots for half the month. We were trading small size for quite a while until we really felt comfortable with this trade. Last month, smaller size, $3,000, trading half the size. 16 winners, 1 loser last month. Now we're at 19 winners, 2 losers this month, 91% win rate. Okay, and then overall, we're at a 94% win rate, 45 winners, only 3 losers in 2 months with a strategy that we have for 0 DTE. So I'm loving what we're doing there. And then we also closed one of those bond naked puts today. We put this thing on 14 pips, took it off at 7. As well, I use the dollars here just to make it easier to track. Okay, we made $109 on this trade in 18 days, 6.7% return on margin. And small trades, we're just trying to pull a couple $100 out here and there on it. We've got more of these working. So we've got one more working here in bonds. We've got a couple working in oil. Let's see what happens with oil. We just need to keep moving sideways and down fractionally here. But that really helping us with these naked puts in oil. I added more naked puts in oil today. So we took off a bond naked put, nice little winner, just adding some cash into the account. And we took that off, freed up a little buying power, which we used to go right back in and buy a oil futures. Let's take a look at the small account. What happened in the small account today? A new all-time high, hitting 15,121, new all-time high, still up almost $500, which is 3.4% on the month. Net lick up 753, which is over 5% on the month in the small account. Delta, theta, in line with what we need. Buying power in perfect shape. We could probably add a new trade, which we'll look to do. And then right now, again, new all-time high in the small account. So we like that. And then if we take a look at the IRA as well, new all-time high in the IRA. So this is the highest we've ever been in this account ever. 2,335 or 235,000 on this. We've already taken out, by the way, we already took a distribution of 10 grand out of this thing. Otherwise, we would be at 245 on this account. So we're up fantastic on the year here. Delta, theta, perfectly in line, new all-time high. BP usage a little bit high, but we're okay with that. We are up on the month so far here, $8,300, almost 4%. And then the actual net lick is up over $8,000, which is 4% on the month. So we are only aiming for 2% in an IRA versus 3% in the trading account. And we're going to hit 4% this month, new all-time highs. Loving it on this. And then overall in the accounts today, we had one of our largest days ever on it. So on our accounts, no sense throwing those numbers around for you because it doesn't really have anything to do with anything. All right, so fantastic day, fantastic week at the beginning here, but a lot of stuff to come. So lots of news coming out the next 4 days, earnings, Fed news, all kinds of economic stuff, lots to go on. If you like this and you're getting something out of it and you're able to improve your trading, okay, please click that like button. We need, we want you to like it. We want you to improve. We want you to learn something from this. If you're not a member already, which a lot of you aren't, go ahead and subscribe. See what we're putting out there. We'll be putting out a whole bunch of new content here this week. So stay tuned for new content this week coming out. Get those notifications on there. And if you're not in the Discord channel, okay, join us in the Discord, okay? Going to help you out. It's going to improve your trading quite a bit. Okay? You're going to see what we're doing. So get on it, get over there in the Discord, see what we're doing, and come and learn from us. All right, there it is for today. Enjoy the rest of your day. Stay safe out there, everybody, and we will see you in the next session. All right, take care, everybody.